Hello and welcome to the Futures free video for Thursday, December 29th. This is David, and let's take a look at the U.S. equity markets. I'll start with the S&P 500 and let you know why I am continuing to look at this market bearishly. And I've got the Voodoo lines here up on the chart. And they're a big part of why I'm looking at things this way. Notably, looking at this 4083 Voodoo Fireline, which we ran into both here at the start of the month and mid-month, and those turned the market back down. Now, this level is the Voodoo Fireline, and these are the most important of the Voodoo line levels. Right, then we've got the tree lines like the one up here at the January all-time high, here at the June swing low, also that we interacted with here at in September and October. So these tree lines are the second most important level. I'm also showing some of these snow lines, which are the third most important of the levels. And where this importance comes in is, in general, what we're going to expect to see is that more important swings tend to come in at more important levels. So not a surprise to me that an all-time high would be made here at a tree line. It's true that it's not a fire line. And we did see other individual stocks turn down from their fire lines and make all-time highs there, but it is at the second most important level, and that did end up being a swing that at this point has held for close to a year. And in the fullness of time, we may see that it holds for materially longer than that. So knowing the implications of putting in a swing at one of these levels, having a resistance, having some resistance here at 4083 has the potential to send us down for a while, right? Exactly how long, I don't know. But what I can do is say, well, breaking this may, as it did back here, send us down to the tree line area. Also, when we broke below the fire line here, tested it back in mid-September and failed, right? It sent us initially to the tree line. It tried to get below that tree line, but couldn't, right? So between significant levels, we can use smaller degree levels to see if the move remains on track. The move down from 4083 could have gotten all the way down to a lower fire line, but it didn't because tree lines held it up. The break below this tree line was held up by snow lines. So right now, what we've seen in the move down from the fire line got held up by a snow line once and bounced, right? Broke below it. It's getting caught up at this snow line. Bounces just to retest the area of 39.17 would not damage the bearish view, right? And potentially, if we can get resistance, then the next decision is down here at 36.48. So long as we don't get support above 39.17 and it doesn't propel us to back above 40.83, I'm going to give some credibility to the bearish potential of this market. If we drill into some shorter time frames, we can come in and turn on some of the smaller degree levels, like these fourth degree Voodoo skylines, and you can see that that coming back up above this 38.14 snow line today has given us some short-term resistance up here at 38.53. And that may send us up to try and get to 38.77, maybe a little bit above, but it would need to get as I said, all the way above 39.17 to really think that this bounce was even trying to get back up to the fire line and establish a more bullish path up towards a new all-time high. So without that, as I said, I am favoring the downside, and these are the levels that I will be watching. There's a similar picture, not quite as clean, but similar picture in the NASDAQ. Again, I'm looking at the cash market, but once again, you can see that the bounce from the October low sent us up into the Voodoo Fireline in the NAS, levels that have been at this particular spot for years, right? And in the move down, we broke, retested, and held below the first snow line to the downside, and worked our way towards a lower snow line, one that we came back above. But if we can get resistance under there, then the next target here, probably one to look for an important decision down here at 10,252. The one difference is that the first tree line here to visit in the NAS would get a new low in the decline from the all-time high. The first tree line in the S&P would need to be broken, and we'd need to continue below that to get back through the October lows there. You can also see that a channel line drawn up from that October low in the NAS has been broken. So this bounce may just be to retest that from below. And if it is, again, that would keep the short-term focus down, especially if it sent us back through this 10,855 Voodoo snow line. So similar picture there. I am looking bearishly, again, so long as levels we've cited as important over-unders get respected as resistance and we don't establish support there. So that would take, in here, using 10,855 as a springboard to get all the way back above 11,277, and then eventually gaining support above the fire line, which, the NAS tried to get above a few times, but never really established support above that level, fell back each time from this channel line drawn up from the October low. So that's what I've got. I hope you found it useful, and I will see you at the next update.
Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.